Baby, hey, how are we? Hope you can see me down here. Guys, I thought I'd just take a different approach. Just talk to you in a very chilled, relaxed manner. Not like up my feet going crazy. Look, there's so much going on right now in the market, so I thought I'd throw a little bit more value your way, just bring up speed and everything that's going on. Because we're seeing huge moves across the markets, right? Like, these are moves. Like, yes, we're seeing like 200, 300 pips. Normal pairs like GU, Euro, Dollar, these moves are incredible. The yen pairs, what's going on? I'm gonna tell you. I've got boring Bloomberg on in the background. Sometimes I have it up there. They're so boring. Look at them, dry, very dry. That's why I do this, to make it sexy and digestible. Anyway, look, you would have seen quite a lot of movements right now. What is going on? Obviously, 1 minute stock markets are all selling off. Next minute, we're boosted to the upside. So obviously, we've been selling off, as you guys know. I did a video on it before, right? Is global panic across the markets, right? We're seeing awful economic data points as a result of course, the coronavirus just is spreading across the globe, crippling a lot of key economies right now. So we've seen a lot of stimulus measures being taken from central banks, but also governments. Governments are really stepping up measures as well to try and prop up all of these businesses to try and cushion the blow from coronavirus. So you would have seen, in terms of stocks at the moment, US stocks are really rallying to the upside. Now, there's a double positive at the moment for US stocks. They're benefiting from QE, all this money being pumped into markets, okay, by the central bank. And I want to go back onto that in a moment. So that's benefiting stocks because they love it. It's all this money going to businesses. Business can borrow this money. They can use it to expand, invest, so on and so forth, which is great, okay? It keeps them afloat as well, taking all this money from the FOMC. But then also you've got the consumers. The consumers are taking this money. Yes, I'm going to go and spend on this product from this business. I'm going to go and use this service from this business. It's great. Yes, businesses loving all this QE right now. But then also you've got this stimulus package now of $2 trillion from US politicians, okay? So they're injecting, this stimulus into the markets and to help small businesses, and businesses are loving it, okay? So they're getting love from the central bank and they're getting love from the government. And we've seen that in the likes of the UK as well. We've seen it across the globe, more sort of stimulus from a central bank and from a government. Now, going back to the central bank, the FOMC, you would have seen the dollar is now we're starting to see that. We spoke about it before, but we're starting to see that change in momentum. Remember all that bull action? Big flights into dollar on a safe haven, but markets hunting for cash as well. The reserve currency of the world, everyone does business in dollars, so on and so forth. But now we're seeing that correction. Why? At the end of the day, the FOMC are absolutely diluting the market with so much dollars. Just dollars. If you've got so much supply of something, what's going to happen to the value? Of course, it comes down. Simple economics. See it as that in a nutshell. And then we're seeing gold. Gold is revived. Woo! The precious metal spot gold is back to the north, rocketing higher. Why? Because gold loves QE. Gold loves it. When the FOMC are pumping money into the markets, when the FOMC are cutting rates, gold loves it. It always performs well in that time. We're seeing a bit of correction for GBP. Guys, we're calling some amazing trades, looking at some good setups on a daily basis. We don't just do fundamentals, we do technicals as well. That's what we do. My decisions are driven, yes, fundamentals, but I need the technical confluences there, baby. So, guys, don't hesitate to check out our membership at freaknetwork.io. What else is happening in terms of how things you see how at the moment sentiment in the market is good. It's revived because of all this stimulative action being taken from central banks and governments. So stocks are rallying. Riskier currencies. If we talk about riskier currencies, we're talking about AUD, NZD. We're talking about GBP. Remember, I said GBP historically doesn't perform well when there's worry in the market. So it's this renewed sentiment that's helping all of those currencies as well. You'd see today they're performing generally quite well. If this changes, this sentiment, how will it change? It will change if we continue and consistently see bad data. Bad. US economy crippling, China crippling, Euro crippling, UK crippling, then this sentiment is going to change very quickly. Okay, so keep an eye on key data points going forward. How can you do that? Check calendars, but how will you know what's important? Check freaknetwork.io, guys. Check out our membership. We go over all this every single day. Monday, Tuesday, Wednesday, Thursday, Friday, not Saturday, Sunday preparation. Ooh. Guys, look, other than that, I'm already blabbering on, but I hope you found value in that. Other than that, let's get it. Enjoy the rest of your week.